Have you ever wondered why two people can look at the exact same company, read the exact same financial statements, see the exact same stock chart, and still make completely different investment decisions? The difference is rarely information. The difference is thinking. Professional investors don't simply collect more information. They organize information differently. They ask better questions, they ignore distractions, and they make decisions based on probability instead of emotion. Today, you'll learn the mental models that shape the thinking of successful long-term investors. These ideas won't tell you what stock to buy tomorrow. They'll teach you how to think for the next 30 years. Let's begin. Part 1. First principles thinking. Most people copy what others are doing. Professionals ask, what is fundamentally true? This approach is called first principles thinking. Strip away opinions, strip away headlines, build your understanding from facts. Instead of asking, should I buy this stock because everyone else is buying it? Ask, what does this company actually do? How does it make money? Does it have real customers? Does it generate cash? Can it survive difficult times? Facts create better decisions. Part 2. Probability, not certainty. One of the biggest mistakes beginners make is searching for certainty. But certainty doesn't exist in investing. Professional investors don't ask, will this investment definitely succeed? They ask, what is the probability that this investment succeeds? That small change transforms everything. Investing is not about predicting the future perfectly. It's about making decisions where the odds appear favorable. Even great investors are wrong. Their advantage comes from being right often enough and managing risk when they are wrong. Part 3. Long-term thinking. The market encourages short-term thinking every day, every hour. Professional investors resist that pressure. They ask, where might this business be in 10 years? Extraordinary wealth rarely appears overnight. It compounds gradually. Patience is allowing quality businesses enough time to create value. Part 4. Opportunity cost. Every investment decision has another decision hidden inside it. When you invest in company A, you choose not to invest in companies B, C, or D. Professionals ask, is this better than my alternatives? Capital is limited. Investing is about choosing the best available opportunity, not just a good one. Part 5. The circle of competence. One of the most valuable concepts is knowing what you don't know. Professionals recognize their limitations. If you don't understand it, why risk your capital there? Stay inside your circle. Never confuse confidence with understanding. Humility protects capital. Part 6. Second-order thinking. Most people stop at the first consequence. Professional investors continue asking, and then what happens? If interest rates rise, borrowing becomes more expensive. Consumer spending may slow. Some struggle, others benefit. Second-order thinking means understanding consequences, not just events. Part 7. Avoiding cognitive biases. Every investor has biases: confirmation, overconfidence, recency bias. Professionals don't assume they are objective. They actively challenge their own thinking. They ask, what evidence would prove me wrong? That question alone has saved many from expensive mistakes. Part 8. The power of saying, I don't know. Many beginners believe they must have an opinion about everything. Professionals understand something different. Cash and patience are also investment decisions. Not every opportunity deserves action. If it isn't clear, wait. Part 9. The professional decision framework. Before deciding, professionals ask, do I understand the business? Is management trustworthy? Is valuation reasonable? Does the company have a competitive advantage? Notice something important. None of these questions ask, what is everyone else buying? Professionals think independently. Part 10. The big lesson. The greatest investors didn't succeed because they were lucky. They succeeded because they developed better ways of thinking. Sound thinking remains valuable forever. The greatest investment you will ever make is investing in the quality of your own thinking. Homework challenge. Choose one company. Before looking at the price, answer, how does it make money? What is its advantage? What risks does it face? Would I own it if the market closed for 10 years? Write your answers. Think independently. Congratulations. Today you learned how professionals think, not what they buy. Tomorrow we reach the final episode. We'll combine everything into one complete framework for episode 30. Remember, the market rewards disciplined thinkers. Build your knowledge. Trust your process. I'll see you in the final episode. To truly think like a professional, you must embrace the discipline of detail. It is not about the grand gesture, but the relentless accumulation of small, correct decisions. This is where the foundation of wealth is built. In an age of infinite noise, your ability to filter is your superpower. Professionals do not seek more information. They seek better insights. They look for the signal within the noise, the truth beneath the trend. Investing is as much a psychological game as it is a financial one. It requires a mind like a calm lake, unmoved by the storms of the market. Emotional stability is the ultimate competitive advantage. Master your mind, master your money. Success is an architecture, not an accident. Every mental model we've discussed today is a brick in your fortress of financial independence. Build it with care. Build it for the long term. Build it for freedom. Accepting uncertainty is the beginning of wisdom. When you stop looking for the sure thing and start looking for the likely outcome, you begin to see the market as it truly is, a vast, shifting ocean of probabilities. Navigate it with courage. Every decision has a weight. Professional investors understand the gravity of their choices. They do not gamble, they allocate. They treat their capital with the respect it deserves, knowing it is the stored energy of their life's work. Expand your vision. Look beyond the next quarter, beyond the next year. Great wealth is found in the far distance. Those who can see further than the crowd will always lead the crowd. The future belongs to those who prepare for it today. Time is your most precious currency. While the cost of a mistake can be high, the cost of permanent hesitation is often higher. Balance your caution with conviction. When the odds are in your favor, have the courage to act decisively. This 30-day journey has been about more than just trading. It has been about mastery. Mastery of self, mastery of strategy, and mastery of thought. You are now equipped with the tools of the elite. Use them wisely. Wealth is waiting. This is Wealth Entertainment 21. We build thinkers, not just traders. Subscribe to join the elite circle of those who choose to think for themselves. Your journey to professional investing is just beginning. Stay disciplined. Stay hungry.